Hi. Hey, everybody. Welcome back. Welcome back. Happy Friday. I hope you guys has a wonderful week, and I hope you're going to have a wonderful weekend that's going to be coming up upon us as well. So I am back, Shane Harris, here again, your trusted guide in the wilderness of taxes and finances. That's me. We've navigated through taxes, we've navigated through bookkeeping, and even payroll together. Today, we're on a new expedition, scaling your business while keeping your tax situation sane and beneficial. Let's dive into tax planning for growth. But before we do that, we got to introduce ourselves. You got to have manners, right? So I am Shane Harris, and around here in these social media streets, I'm also referred to as Shane the Negotiator, and I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching service. That is what it is I do. That is who I help. So let's get on into this topic. Why tax planning matters in scaling our businesses. So scaling your business is exhilarating, but without a robust tax strategy, you might face unexpected tax liabilities or miss out on potential savings. And I know you guys like to save money. Remember, as you grow, your tax obligation also evolves. Being proactive with tax planning ensures that that your scaling strategies are tax efficient and aligned with your business goals. So scaling scenario, pitfalls and opportunities. Imagine scaling from a sole proprietor to an LLC or even a corporation. You anticipate profit increases, but overlook how different business structures impact your tax obligations. So, for instance, in scaling, you may encounter a new tax bracket. That's right, you up there with the tax bracket, eligibility for different deductions, or even access to new tax credits. The goal is to leverage these changes, avoiding the pitfalls while grabbing hold of opportunities. So let's get into some strategies leveraging tax credits. So strategy number one is to maximize your tax credits. So some credits are explicitly designed to support business growth, like the R&D tax credit, which also stands for research and development, which rewards businesses investing in innovation, or the work opportunity tax credit for hiring from certain groups. Actively seek and utilize these credits to offset your tax liabilities as you scale is the game changer. So strategy number two, we're going to talk about some optimizing deductions. So next up, optimizing deductions. Scaling often means increased expenses in areas like staffing, infrastructure, and marketing. Identify every possible deduction related to your scaling activities. This include startup costs, expenses related to opening a new location or hiring new team members. As I talk so often, it's also in my coaching program where I help people transition to be from employees to employers, and having a team in place becomes a game changer when you're trying to do this, because I want you guys to get out of that habit of doing everything in your business yourself and start putting a team in place. So there's credits to help you do that. So let's get on into strategy number three. Choose the best business structure to support your business growth while minimizing tax implications. So for instance, as a sole proprietor, you might transition to an S corporation as you scale to benefit from tax savings related to self-employment taxes. So ensure the structure you choose aligns with both your current situation and the future plans for your business. So let me dig a little bit deeper into that. So let's just say you started your business and it kicks off. It kicked off within 6 months, or it took 4 years to kick off. It doesn't matter. And you are in the revenue point of you're making like 500K. Now, if you have an LLC as your business model, you are you are paying way too much in taxes, because 500K, let's just say, even if you have a team in place, you have all this marketing going on, and you have different locations or whatever the situation is, and let's just say 300K is what you spent. you still have 200K in profits that you're going to get taxed on. And that tax is on 15.3% because that's the self-employment tax rate. So imagine if you had this exact same scenario, but you had an S corporation instead. That 200K that you have remaining, let's just say you have, not just say you are on payroll, because you're, as an S corporation, you have to pay yourself payroll, you have to pay yourself wages. So you're on payroll, and out of that 200K, you paid yourself 100K. So there's now that 100K becomes part of your expenses that your business writes off. So now instead of 300 in expenses, you now have 400 in expenses. And that last 100K is profits. That is what's going to be self-employment tax. And the 100K that you paid yourself is going to be income tax. So that's a little bit different. So I just wanted to give you a little bit of example of that so that you really can understand the difference between the LLC and an S corporation. And when you start to scale, why one might be more beneficial than the other. So let's get into additional tips seeking professional guidance. So don't forget the power of professional guidance. As you scale, a tax professional or a CPA, whichever you prefer, can help navigate complex tax laws. Like I said, tax laws is ever changing, and you may not know all of the tax laws. We don't always know all the tax laws off the top of our head, because I got several tax books over there, and I have several colleagues that I converse with, and I got the IRS website, and sometimes I'm on the phone with them to try to figure out some of these laws, because not always as clear. So you want to make sure that you are aware of all of this. If not, you reach out to the professionals who that this is our job to do this, so you don't have to worry about doing all this research. So this ensure you comply while also strategically minimizing your tax burden, because nobody likes to have to pay more taxes than necessary. We don't want to have to pay taxes at all if we can help it. However, it's a part of life. In the United States, you got to pay some taxes sometimes. And of course, the more money you make, you guys like to think that the more money I make, the more I'm going to pay in taxes. Not necessarily. There's strategic ways, and that's why we're talking about tax planning, because with tax planning, you can minimize or even eliminate your tax liability altogether if you apply the right strategies. Okay? So, an investment in expert advice often pays dividends to save time and avoided financial mistakes. I'm going to say that again for the people in the back. An investment in expert advice often pays dividends through saved time and avoided financial mishaps. That's what I wanted to say. So that pretty much wraps it up. So, and there we have it. So strategies to ensure your business scales with tax sanity. In our next episode, we'll explore business restructuring, a tax saving navigation. So trust me, whether it's pivoting or merging or altering your business model, you don't want to miss this insight. So until I come back next time with the next topic, or I squeeze on through in the middle of the week with something else, with a short or whatever, I hope you guys enjoy the rest of your Friday and have a wonderful weekend, and I'll see you next time.